What's going on, everyone? CTM, I hope you are well and doing great on this bounce Wednesday. Nice to see the green. Nice to see Bitcoin up over a couple percent. Bitcoin peaking below $100,000. Did structure break? Take a look at that in 1 second. NASDAQ on the rebound. Re-acceleration. The hard data is re-accelerating. 3 to 6 months from now, it is going to become the narrative. Seeing private jobs added strongly, seeing PMIs, both starting to be into expansion territory now. Surprise on services coming in pretty hot. Inflation potentially also. What's going on with the expectations for the December cut? It is actually on the table now. We're getting close to 50-50, you know? No. By the way, guys, before we get going here, and you know what? First of all, we have the Supreme Court ruling today. Do not get comfortable for 1 second. If they rule against the tariffs, I have no idea of the market's reaction. If they rule in favor of the tariffs, I have no idea of the market's reaction. If they rule against the tariffs and markets react one way, maybe they rule against them. The market starts like running hard. I don't know what happens. And then all of a sudden, Trump makes an announcement that they're then like gonna, you know, do this instead. Then the markets could come smacking down. Like just be careful. I don't know what time that ruling is expected. Right now it's 12:30 in DC. And whether or not it's before the closing bell, after the closing bell, it's just a hearing, no ruling. Could someone check in on that really quick? Could someone ask Grok whether or not we get a ruling today? Anyway, it's kind of important. If someone could do that, please, let's do that. Jordan, really important. Tomorrow, guys, tomorrow we have to start our session an hour early. Instead of 12:30 p.m. Eastern time, it'll be 11:30 a.m. Eastern Standard Time. And I appreciate that. I have just a really important event that I need to attend. Decision comes. Does anyone have an idea? Could we put any type of potential timeline of when we get that decision? As you'll know, we've seen Renaissance Technologies, the greatest performing quant fund in history, currently down 14% on the year, having trouble being able to maneuver within a regime where the president could just tweet and just change the course of price action, going back, how I don't know how many, I don't know how far back their models are going. I imagine pretty significantly far back, and never before in history has there been a similar situation. So that's of note. If they do vote against the tariffs and say that the president did not have the authority to do that, the administration, it seems, unless they're bluffing, don't trust, like, is going to go ahead and they're going to come up with some other semantic around it, and then we'll see whether or not that one gets like then the tariffs will be on. Anyway, this is the world we live in. JB, sorry about that. I'm not getting your emails. Just wanted to find out a little bit more about the program. Look, I don't get the emails, so I'm not sure what you're looking for. Hey, if you have a question, type it here now, and we'll try to help you. But man, all I could say is you join us. Absolutely, absolutely phenomenal opportunity here. CTM strong. So let's jump in. Let's get going. Let's get rolling. It's nice to see the bounce. Don't get comfortable at any point in time. Yes, we do actually have some signals pointing towards some improvement in the hard data. Very strong. We saw over here, obviously, on the headlines that 42,000 jobs, private sector jobs added. Here's a chart, and that's That's a good sign. That's for sure improvement. Then you also know that we are seeing the services PMI at 52.4 coming in better than expected, and the manufacturing came in still at 54%, still pretty strong. I don't know if it's guys, let's sip it on the matcha today. S&P global services. Sorry, complete manufacturing. Manufacturing is barely like at 50. Global services, it did rise to 54.2, but below 54.8 expectations. Are we seeing signs of, listen, we're seeing that the consumers are often pushing back on prices, and that means that the margins are being eaten into. Right now, after today's data coming off of yesterday's, we saw actually an improvement in a pause. We're now at 65% cut in December, 35% pause. Don't forget, just so you know that what we're watching as we move into the end of the month, we have the Fed Beige Book. Powell said on November 26th, we get the Fed Beige Book. That's the only data basically that the Fed has, flying mostly blind with the government down. However, the government could be, it could be back up tomorrow. And we would have the first week of December a bunch of jobs data ahead of the FOMC decision. So it is basically a live meeting at this particular point. Obviously, expectations are leaning towards that cut, but we will find out. Cabby, bless you, my brother. So the great question over here. Let's start off with this question, and we're on the matcha today, and we got a nice little bounce, and we're just kind of easing along, enjoying life. Listen, in 2021, the monetary policy was aligned with the bull of all bulls, and we saw, obviously, I'm trying to pull up a chart of Bitcoin. In 2021, we had monetary policy aligned. Right here, they began lowering rates, first of all, in 2019. And then what's most similar to where we are today is that the Fed stops QT and then begins that balance sheet expansion. And we're on the verge of that. We're on the verge of that in so much as December 1st is scheduled, the end of QT program, and then expectations are that balance sheet is going to begin rising. When that was happening, that was very conducive to risk. And then, we had the global lockdowns. They cut rates down to the zero bound, and then they just flooded the system. Trillions of dollars, and that continued. So this was the bull of all bulls running with monetary policy aligned. We did always say that the greatest risk to the bull market was going to be Fed policy. And what happened here on October 16th, the Fed meeting minutes showed that they were going to stop. They were going to stop QE. And we put out a tweet October 16th. Looking at the macro, it appears in 2022 there is going to be a rate shock. And Bitcoin is not immune. So that's what happened. And, a month later, they begin the wind down of QE. So there's still, the balance sheet is still rising at this point. It's still rising as they wind it down over the next few months. But what's happening, it's a lesser pace of QE month over month. And that's tightening. That's the turn of where it is. Yeah, there's still loose conditions ahead, but markets are looking forward, and they're looking forward out until March when the Fed began hiking rates. QE completely wound down, and now they're pulling away liquidity. And this is where M1 peaked over here in November. Total monetary supply peaks in November 2021, and that's the top. Now, what happened over here was different. The Fed is still super tight. Powell's talking about pain. There's more pain ahead. But then, because of this new era of fiscal dominance we're in, we see liquidity returning into the markets. We see a greater role by the U.S. Treasury, the TGA. And then we have a couple of times, this time is different. We had a couple of times where the TGA, now a major force here in the market, when they were running it up. If I come back over 5 years, you have this period here, and markets correct biggie or in this period over here. This is the major first leg down of Bitcoin as well. Another point where they refill it, markets went into correction. I think it's roughly over here was a pretty big correction. Over here it's about 14%. I don't really remember, but that's about right. And this time, I thought this is going to be a headwind. The last two times the TGA was being refilled, markets were under pressure because they're pulling out away that liquidity. This time, they refilled it beyond expectations, and markets are still doing their thing. This is the chart. I mean, markets have just been defying gravity and still do. And like on that move yesterday, I think we were at extreme fear, just off all-time highs. And you have to wonder what is max pain, you know? At least I wonder. Like around the top. So let's go ahead and let's just continue these conversations that we're having. But that's the difference. That's what happened back in 2021. Now we're in a position where why Fed is tight, and Fed's first cut comes in September 2024. Surprise 50 basis point cut ahead of the election, and then they don't cut again for a full year. Now we've had two 25 basis point cuts. Further are expected, and they're winding down QT. So now they're moving towards easing and monetary policy, which was like a headwind for the over here the macro cycle we were looking at, and whether or not we were late cycle or if we were. I mean, obviously we're not early cycle. Early cycle was obviously 2023, beginning of 2024, back when Michael Burry was like sell. Jim Cramer called the melt up, but we called the waterfall. Anyway, you all know the story. That's why you're here. So we had earnings have continued to improve. Labor market obviously has been, and the data was fake at this point. It was in a worse situation than we realized when we did this analysis. But again, my own belief here is that it's gonna settle down. We saw a nice print today, and that it's like the worst deceleration is over for a while. Yeah, lots of middle management jobs still going to be lost. Lots of tech jobs are still going to be lost. No question about all of that. We're waiting for the PMIs to begin rising. PMIs are not hot, but they are rising now, right? That's improving. The only thing that was important was that was holding us back was Fed policy. And Fed policy with QT running, with rates elevated, was very restrictive, even though the markets have been able to rally significantly over a 3-year period with those tight conditions. And now the Fed looks like it is backing off and moving towards easing. And the question is, are we going to see that reacceleration, right? And it's a big deal. Is the Fed cutting into a recession, or is the Fed cutting into normalization? Because basically, S&P difference 1 year out is basically about 12% to the upside or downside within a point or two. But whatever. And that's enormous ramifications. And the hard data is now showing signs of improvement. And then we have obviously this. I mean, this is a bullish post. So let me show you this bullish post over here. And then we'll get back to Bitcoin because I want to talk about it. But so this is a post that's titled "Welcome to Late October 2025." You read the beginning. It's real, but Microsoft Azure cloud business is up 40%, and then we know that now OpenAI is spending $50 billion a year paying Azure for the next 5 years. Alphabet's is up 34%. this isn't a bubble. The Fed chair admits AI is now a major source of GDP growth. And by the way, I even checked in on the Atlanta Fed. Last I checked, it was 3.9%. Now it's at 4%. I mean, obviously, like it's having a major effect on the GDP, the amount of spending we're seeing taking place here. And yeah, a lot of people told you we were in stagflation. I mean, that's not what we're seeing. Um, Wharton School of Business finds 75% of corporations already report positive ROI. I don't know if that's true or not. The numbers are getting astronomical. OpenAI is planning to spend $1 trillion a year on infrastructure. Where are they going to get the energy? And is pre-pricing its 2027 IPO at $1 trillion. Liquidity event exit. The displace. Are you buying the OpenAI IPO? And if they are able to IPO, where do you think that company is 10 years from now? The displacement is here too. Tens of billions of white collar jobs are vanishing. Amazon is cutting 30,000 corporate roles specifically to pay for AI infrastructure. Management consultants are being automated. The only guaranteed growth sector, HVAC, cooling, the entire economy, all that is capable of being. Anyway, they probably had an AI write that. And then you have the other side of that, is the AI trade at an inflection. Advanced Micro Devices results were objectively good, but fell short of market expectations. Super Micro dropped on margin pressure despite its beat. And then you have investor demand, AI ROI, where like you're spending a zillion dollars. Where's the return? Now, the people that are spending this money, they're not concerned about the return right now. They're concerned about reaching super intelligence. They understand network effects and they believe that whoever wins is going to basically lead the future. At some stage, investors will want to see AI translate into increased revenue from the end users. Whereas, I mean, yeah, does anyone expect that to happen in 2026 or 2027? Do you think like ChatGPT is going to be like, yeah, your subscription is now $50 a month? I mean, I think what they're interested in is building out infrastructure, as much compute as possible. And I think that they're interested in onboarding as much users. They're interested in gathering those network effects as well. I don't think that anyone's was that like this is the story of Amazon in the early 2000s. You're losing money. Basically, like I don't care. Who cares? You know. By the way, I thought in 2001 that Amazon was going to go bankrupt. Bill Miller stepping in and balling before he balled into Bitcoin. Credit stress is just going to lead to obviously further making sure that liquidity is ample. In my own opinion, credit stress leads to that leads to stronger move to the upside. So we are seeing, it looks like the U.S. government is on the verge of potentially looking to open up, and markets might be bullish on that. Again, I'm worried about that curveball. Do we get any type of idea about when we might see? Man, this is a problem. When we might have the Supreme Court decision, guys. The problem is that man. Like right now they have on the Amazon trucks, they're putting on these glasses, and instead of having to scan everything, the driver could just look at the package. It tells them what to take, where it's training their AI infrastructure for when they're ready to move towards the humanoids. Like the drivers are basically training what is going to be their replacement, and probably with this build out of these data centers as well, massive construction taking place, and likely the outfits behind that probably have on some type of meta glasses, right? Like the humanoids will be here and they will be replacing those jobs. Right now, yeah, there's work to be had. And same thing with the truckers, right? It's one of the big transportation is one of the biggest job sectors in all of the US. And soon they're going to be automated. Does that mean that as jobs dwindle, that the markets are, you know? Um, and what happens eventually? We must like reach a tipping point when like there's no one left to click. There's no one left spending. Oh my gosh. Anyway, um, so check this out. This is a little bit of our structure. And when we left it off, we were saying if we lose this line, then we're likely closing the gap below. Check that out. We did close the gap and have been bouncing off of it since. So I'm looking for upside resistance right now. And I don't know if you saw me, like as we were going live, I, I, is this the resistance? You know, closing, is that even a gap? Yeah, it's a big gap over here. So down over here, some resistance coming in below the whole number 26,000, and above that then we're playing closing gaps all over the place. That brings us up to 26,125. So is this still in jeopardy? Is this nothing more than a bounce? It's a bounce right now, and bounces could be faded, and I'm not comfortable. That's for sure. There might be some other stuff that I wanted to cover. I think we're good. We saw, unfortunately, Tesla take a stop loss on this morning's pressure on the opening, and Tesla trades with that tight stop loss, now out of the market. Strategy continues pushing it short, and even though Bitcoin is bouncing, that's not yet being translated over into strategy. And I mean, this looks, just we zoom in here 1 second together. So the hedge remains in place. And so here's liquidity a little bit below. So if strategy takes this out, then discretionary wise, we'll look for if we that's the point that we trigger a breakout. But we're following obviously, and you remember how bullish people were over here, even over here on the breakout, man, knowing when to be out of the market, went out, and on what side. Absolutely priceless. FNGU is still holding on pressure on it. It's down 0.7%, coming off of somewhat was looking like a nice entry. And then Nvidia here 5.8% into profit, and we're just hedged right now. And we're seeing Tesla out of the market. We're seeing IBIT and TQQQ both out of the market, and we're just managing right now these three positions on equities. And then we only have right now left in the market is Cardano with an attempt made by Ethereum. And then here we are, stopped out. And Ace knew it. Ace said on the entry last night, I don't feel good about that entry. And true to form, quick stop out. Let's look at Ethereum here from a discretionary point. What about Cardano? We're not even close to the exit. Still holding on to a decent amount of profit. So the hedge remains. On the V4 templates forward test, they're all still holding positions and still short the market into profit. And we're looking and waiting for exits on the forward test there. I wanted to check in on Ethereum. So you could see that, and I had this not down over here. I had this right here, up here, off of what was this was a test of resistance holding, this whole area of resistance. And you could see that afterwards today, I'm going down, where do we peak out? And then I'm looking left and I'm seeing this area. And I'm trying to learn from it in so much as that often when you have like some type of resistance like this, when it's tested downside on support, it's not usually the top, right? It's a little lower that it comes into. So anyway, and gold and silver, we're seeing just maintaining their consolidation, which I expect likely is going to continue towards and into the first quarter of 2026. So that's something that I continue to track and watch. Silver as well. And so far, I mean, it's just the beginning. We probably have a couple of months ahead of us. So far, they're hanging in there pretty well. Bitcoin, so far, let's take a look at Bitcoin. Nice bounce today so far. So the same thing. I have the area of interest over here, our structural support down off of the April low. And I see that we only came down to here. So first of all, two things. Did we take out? We didn't take out the low here. All right. And then I just want to see, wait, let me do this. As I do that, let's do that back. As I move it up, let's look to the left with our eyes and see what it's catching. And so you see that resistance right here, that tag of support, 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 and then we wicked under, but the body's held over here, and that's where we wicked into yesterday. I mean, just interesting. That's the only reason I'm sharing it with you. And I don't want to get too crowded over here. So I'm going to remove the one I just put in because obviously it's this one. If we break, that brings in the deeper correction that we'll be monitoring if it happens. We're not looking for a repair at this moment. And then I just want to check in on this other view of structure we're looking at. And we still so far have higher highs and lower lows. It's a very consolidated chop. It's trying a lot of people, but structure is still there. There's nothing of alarm or concern. I wanted to, because this is our first angle of ascent. And then I've been noting that we've kind of changed and we have a new parallel that's formed with this 1-2 touches here and then 1-2 touches over here. And I'm just gonna bring this up to the bottom over here. I don't think we touch it. Pretty close to it. So now we have on that structure, there's one touch, and we just came into it. And so I wonder, are we putting in a new level low that's going to go like this up? I mean, I'll keep this one down over here. This seems to be the bottom of the channel, but we're hopeful. A lot of people think we are headed that the top's in, and we are headed towards a bear market in 2026. I think that's presumptuous. We're seeing right now signs that hard data is improving. We're seeing GDP at 4%. We're coming into this fourth quarter with the economy running strong. So to be looking for the top here, I'm not seeing it. I'm under the belief that we're actually going to see, with monetary policy coming in line with this strong momentum that is here, that we're going to see further improvements, specifically and especially also with the stresses we're seeing out on the financial system. And if those need to be addressed, that's just putting more fuel here. I have no idea. Look, I don't know. I don't know when we continue higher. I would love to see that. Like, what happens if the Supreme Court rules the tariffs are no bueno? I expect volatility. If the market's able to walk through that, get past this hurdle, if the government reopens, then I think that we start moving towards a favorable and November into December. So if those things don't fall in line, then we continue to be under pressure. We might have to push that out into the first quarter. Sweet. 3-day look. Let me start over here. Just take a look. Come back over here as well. Well, this is on the 3. That's what you were looking at. I mean, on both those looks, I mean, look, we need a breakout above here, claiming this structure and breaking out to the upside. Of course, everyone's going to be bullish. Bitcoin will be above 114, $15,000. Where it can, if it's back at 120 in a heartbeat, everyone's going to turn bullish. We might need the government to reopen in order for that to happen. It looks like that's the direction things are headed. And we're just, as far as our positioning, we're just hedged. And that's the uncertainty. We like when we start seeing full positioning and in the same direction. That's when we're running strong. There's every reason for things to be uncertain right now. No, into January. Well, let's go back then. Let's hope we climb that wall of worry. Big Bear. Big shout out to your wife. Legend. That's awesome. Love to hear it. Gold Atlas. I don't know if you asked that question before we looked at gold and took a look at it, but yeah, I mean, I think gold is going to continue here consolidating, and I mean, this doesn't really count, but if you look at how long this consolidation was, it almost coincided with the rise up. I'm looking at roughly the length of the rise up, and I'm giving it that length, and I'm saying, unless price breaks above this angle I have here, which is a rough angle, it's never been tested to give me, but it's a rough angle. Like, that's late. If a price breaks above there, then likely it's on. But I imagine that there's a strong chance that we could be in that consolidation up until around here. And then that seems like a good time to that, guys, that's a rough estimate, but that's a good rough estimate, I think, here. And, are we going to test up and down from where price is today between here and there? Likely. And is anything, it's just price consolidating. So I'm not looking for a dramatic rise. This rise was dramatic and went a lot higher than people expected, as well as I was hoping we got to 3,000 during this consolidation, and instead she just consolidated underneath that resistance, right? Instead of consolidating a little bit more weaker in hindsight, right? But we did have the line. This is when it's done breaking out. So that's all. We're here for now. V4 it looks like it's lit. I love seeing the forward test, and Hypernova, you and me both. All right, y'all. Tomorrow we're getting online earlier, an hour earlier. If you don't have the alerts coming on, hit the bell. I'll post the link in the Discord. Those that could be here tomorrow, grateful for it. If not, watch us on the replay. Everyone, have a beautiful day. God bless you. I don't have any thoughts on the gold silver miners. I think I was looking at Nugget yesterday with y'all. So you see, watch yields here, right? This is an important area, and yeah, if they break out, this could accelerate, back up. So it seems like Robert on the replay. It seems like my line was a good look in retrospect down over here, giving it room. Nugget. So it looks like it's consolidating with gold here. I mean, it flew up. I don't know. I think miners are really, really difficult to play. We saw the bull market in gold breakout. We called it in March 2023. It was a little early, and man, just recently did they have a good run. A great run. But yeah, the miners are tricky. Extraordinarily tricky. I stay away. It's just very difficult for me to prepare the session if it's an hour earlier. But perhaps, Deep Power, absolutely. I love you being here live. That's very late. So let's see how tomorrow goes, and then we'll take it from there. God bless you all, everyone. I'll see you all earlier tomorrow, which is awesome for Deep Power. Deep Power, we love having you here. Everyone, have a beautiful day. God bless you.